Hey everyone, and welcome back to the Gold Talk Show.
Great to be here.
So today, we're going to really dig into something that's been making some serious waves in the investment community. It's this report, this news about China supposedly selling off a pretty big chunk of gold, something like 30 tons.
That's the figure floating around, yeah. And it's definitely caused a stir.
Exactly. And, that kind of headline, it can understandably cause some real anxiety, maybe make investors think about making some, hasty moves.
It certainly can. I mean, just the hint that a major player like China might be shifting its gold strategy, that has the potential to send ripples, across all sorts of markets.
Right. Not just gold itself, but the U.S. dollar, stocks, even real estate and crypto.
Absolutely. They're all interconnected in complex ways.
Okay. So our goal today in this deep dive is to try and cut through the speculation. We really want to look hard at how credible this 30-ton gold sale story actually is.
And then unpack the potential knock-on effects, right, across those key assets.
Precisely. So definitely stick with us. By the end of this discussion, you should hopefully have a much clearer picture of what might really be going on.
And hopefully be in a better position to make, informed decisions, not reactive ones.
Couldn't agree more.
Well,
okay, let's dive in. The headline itself, China sells 30 tons of gold. Fact or fiction?
Well, that's the million-dollar question, isn't it? And the absolute first, the critical thing is to ask, where did this information actually come from?
Okay.
Because it's really important to stress this. The news did not come from any official source. We're talking, the People's Bank of China.
Right.
Nothing. The IMF, silence.
World Gold Council.
Nope. None of the reputable established organizations have confirmed anything like this.
It's okay. So if the usual suspects, the official channels, are quiet, where did it bubble up from?
Well, the trail seems to lead back to an unverified post made by a personal account on a relatively new international online forum.
A personal account on a new forum.
Yeah. And, unlike, say, Bloomberg or Reuters, this kind of platform, well, it often lacks rigorous source checking. There's not much content moderation.
So it's basically like hearing a rumor down the pub, but on a global digital scale.
That's not a bad analogy, actually. It immediately sets off some pretty loud alarm bells.
It really does. It makes you wonder, could this be part of some, global psychological game?
It's possible. Where, a simple bit of unverified info gets amplified online and suddenly triggers mass selling based purely on sentiment, not facts.
Okay, so let's look at the market's reaction, or maybe lack of a huge reaction. You mentioned an 8-9% adjustment in gold.
Yeah, there was about an 8-9% dip in the gold price within a week of this news breaking. But crucially, this happened during a major holiday period in Asia.
And Asia is a huge player in physical gold.
Massive. Over 60% of global physical gold demand comes from there. So when you have a long holiday, trading activity drops off significantly. You get low liquidity.
Yeah.
Which means the market is much more susceptible to rumors. It takes fewer trades, less money to move the price significantly when there aren't many buyers or sellers around.
Right, like throwing a stone into a small pond versus the ocean. Bigger splash in the pond.
Exactly. We've seen similar things before, haven't we, where sentiment just takes over.
Yeah, you mentioned an example earlier about Buffett.
Yes. Back in 2020, there was this big rumor flying around that Warren Buffett had completely dumped all his gold stocks.
An addy.
Well, his company, Berkshire Hathaway, had reduced its position in one gold miner. But the story got amplified, into this narrative of a total sell-off.
And that impacted prices.
Oh, yeah. It caused a noticeable dip in gold mining stocks. The information didn't need to be perfectly accurate, just the negative sentiment was enough to move the market. It's a classic example of perception driving reality, at least temporarily.
It really shows the power of psychology in investing. Okay, let's put the number itself, 30 tons, into perspective. How big is that really on a global scale?
Globally, it's tiny. We're talking about total above-ground gold reserves of well over 200,000 tons.
Right.
So 30 tons, that's about 0.015%. It's minuscule. It's definitely not enough to be some fundamental fire sale that drastically changes the global supply-demand picture.
It's big enough to sound significant, maybe? Big enough to trigger fear if the story catches on.
Precisely. As we just discussed, even a small catalyst, if it hits the right nerve, if it gets amplified by fear and speculation, it can cause volatility.
So the core issue here might not actually be whether 30 tons of physical gold moved somewhere,
but rather the belief that it happened, and that belief then driving people's actions in the market.
That's fascinating because belief in investing can become a self-fulfilling prophecy, can't it?
Absolutely. If enough people fear a price drop because of a rumor, even a baseless one, and they all start selling, well, they actually cause the price drop they were afraid of.
Which brings us to a really critical point for everyone watching, I think. Is the real story here whether China actually sold the gold? Or is it whether we, as individual investors, are potentially getting caught up in what could be a cleverly orchestrated psychological game?
That's a very sharp way to put it, because it feels like those who react impulsively, who jump ship based on unverified news like this, they might be the ones who end up losing out.
While the big players maybe do something else.
It's certainly plausible. While, many retail investors might see the headline, panic and sell their gold, it's quite possible that larger institutions, maybe ones that bought gold at lower prices, are quietly using this dip, this perceived panic, as a buying opportunity.
The old buy low, sell high, potentially happening right under the surface, feeding on that retail fear.
Yeah.
Okay, so for people holding gold now, what's the thought process?
You really need to step back and think about your time frame, your strategy. Are you in gold for the long haul, believing in its historical role as a store of value?
Or are you just trying to play the short-term swings?
Exactly. Making a knee-jerk reaction based on a shaky rumor that could completely derail a well-thought-out long-term investment plan. You need to be careful.
Makes sense. Okay, let's shift gears slightly. Let's talk about the US dollar. Often when there's uncertainty, we hear cash is king.
That's right. And in global finance, especially during turbulence, the US dollar is very often seen as the most trusted form of cash.
So this unverified China gold news, did it impact the dollar?
Well, we saw that short-term anxiety it caused, contributing to that 8–9% dip in gold prices. And corresponding to that,
Yes.
we saw a subtle but pretty consistent rise in the US dollar index, the DXY.
Which tracks the dollar against other major currencies.
Correct. That uptick suggests that, at least temporarily, some funds were likely flowing out of gold and into the perceived safety of the US dollar.
So a typical flight to safety move we see in markets?
Looks like a classic reaction, yeah. When investors feel uncertain, they often seek a temporary safe harbor for their capital. We saw it clearly in the 2008 crisis, and again in the early chaos of the 2020 pandemic. The dollar becomes a kind of psychological shield.
That makes sense. And as you hinted earlier, if, hypothetically, large Chinese institutions were selling some gold, moving those assets into dollars, highly liquid, globally accepted dollars, especially right before a long holiday with low trading volume, that would seem like a pretty logical professional risk management move, wouldn't it?
It absolutely would. A rational step to reduce risk exposure in that specific context. But again, for the individual investor watching this, the key question is this shift to the dollar just a short-term tactical thing?
Or is it the start of a bigger, longer-lasting trend?
Exactly. Because holding too much cash, even US dollars, for too long, that has its own risks, especially right now.
You mean inflation?
Precisely. In a higher inflation environment, cash just sitting there earning nothing, it actually loses purchasing power over time. Its real value erodes.
So for most people, moving heavily into USD probably shouldn't be seen as a long-term investment strategy itself?
Generally, no. It's better viewed as maybe a short-term strategic pause, a way to potentially ride out some volatility, wait for clearer signals, maybe look for better opportunities to rebalance your portfolio later.
More like a temporary parking spot than a final destination.
That's a good way to think about it. Investors really need to keep reason ahead of emotion here. The dollar isn't some absolute guaranteed safe haven forever.
And its current strength doesn't automatically mean gold is finished.
Not at all. It's more likely just a temporary rotation, a change in how large portfolios are allocating assets for the moment. Roles can shift back.
Okay, so if money is potentially flowing out of gold, even temporarily, where else might it be going? The stock market often comes up.
That's a very logical place to look, yes. Because stocks, while definitely volatile, they do offer the potential for growth, for capital appreciation. Gold fundamentally doesn't offer that yield or growth component.
So a dip in gold might make stocks look relatively more attractive.
It could, especially certain sectors. Maybe manufacturing, some parts of the mining industry, obviously not gold miners, perhaps even banking. Sectors that might benefit from lower input costs if commodity prices like gold are seen to be weakening.
So it's not just an exodus from gold, but potentially a reallocation by, let's say, smart money.
That's often how it's framed, yes. Imagine an institutional investor who perhaps made good profits on gold. They might lock in those gains and then look for other opportunities. Maybe they see a stock market that looks reasonably valued and could benefit from new capital flowing in.
Have we seen that happen before? A gold correction followed by stock market gains.
Yes, there are examples. Think back to mid-2013. There was a significant correction in gold prices then.
And what happened in stocks?
Well, in Vietnam, for instance, the VN Index saw a pretty strong rally around that time. Part of the narrative driving that was expectations of recovery in sectors like steel and banking.
Why them specifically?
The thinking was that falling input costs, including potentially lower financing costs linked to commodity sentiment, would boost their profit margins and ultimately their earnings per share.
Interesting. However, you also flagged a major warning earlier about this whole gold story potentially being a psychological trap.
Yes, and this is absolutely critical when considering stocks. If a stock market rally is being fueled primarily by these unsubstantiated rumors about gold selling,
rather than solid company fundamentals or a good economic outlook.
Exactly. Then the stock market itself could quickly turn into a very risky place, a kind of minefield.
Because if the rally is built on sand, on a shaky rumor,
Yeah.
once that rumor fades or is debunked, those potentially inflated stock prices could just plummet.
Precisely. Investors have got to be incredibly careful about FOMO, that fear of missing out.
Right. Seeing stocks rise and jumping in just because you think money is flowing out of gold.
Only to get caught holding the bag when the market realizes the initial story wasn't reliable. It's a classic trap.
So the key is to look behind the flows. Why is money moving? Is it based on genuine optimism about businesses and industries?
Or is it just fear and rumor swirling around? Being able to tell the difference. That's absolutely crucial for making sensible stock investment decisions right now.
Okay, let's shift to another major asset class, something tangible. Real estate. How might this unverified China gold news play into that market?
Well, particularly for many experienced investors in Asia, real estate is often seen as, the other big safe haven alongside gold.
There's a strong cultural element there, isn't there? Land and gold.
Very much so. A deeply ingrained belief in many societies that if you're not holding gold during uncertain times, then holding physical land or property offers that long-term security.
But real estate is different. It doesn't react like gold. It's much slower, less liquid.
Exactly. The reaction in property markets is typically much slower, much more gradual compared to gold or stocks. A decision to move significant capital from gold into real estate isn't usually impulsive.
It's a bigger, more considered decision.
Definitely. It would likely be made by long-term investors with available funds, and it would heavily depend on a whole range of broader economic factors.
Like what sort of things?
Oh, our prevailing interest rates are huge, the legal framework around property rights, what's happening with real purchasing power in the economy, and, crucially, general confidence and expectations about a sustained economic recovery.
Plus, as you said, it's not liquid. You can't just sell a building tomorrow if you need the cash like you potentially could with gold.
Absolutely. That low liquidity makes it less suitable for someone just looking for a quick, temporary shelter after selling gold.
And what about the specific situation in China's own real estate market right now? Does that complicate things?
It adds a massive layer of complexity, yes. The Chinese property market is still working through a major restructuring after years of, explosive growth. They're dealing with significant debt issues, large inventories of unsold properties.
Just for Chinese investors themselves, jumping from potentially uncertain gold into that real estate market might not seem like an obvious safe bet right now.
It seems unlikely to be seen as a straightforward, low-risk alternative at this particular moment. It carries its own set of significant risks.
So, bottom line, we shouldn't just assume that a dip in gold prices automatically means money will flood into real estate.
Definitely not. While real estate absolutely can be a solid long-term store of value, it might not be the best fit for short-term capital preservation, especially compared to more liquid assets.
It sounds like investors need to watch the wider signals, what usually needs to happen for big money to really start moving into property.
Historically, you tend to see significant capital inflows into real estate when you have a strong combination of factors. Things like relatively low interest rates, high overall market confidence, and really clear, convincing signs that the economy is on a path to sustained, robust recovery.
Conditions that might not just appear overnight after a gold price wobble.
Precisely. It's usually a more gradual process.
Okay, last asset class on our list, cryptocurrencies. Now, this is interesting because while gold saw that correction, Bitcoin and some others seem to move up. What's going on there?
Yeah, that observation definitely fuels the ongoing debate, doesn't it? The whole, is Bitcoin the new digital gold? Question.
Is it? Is this proof that crypto is taking over gold's safe haven role?
Well, I'd be cautious about jumping to that conclusion based just on this recent price action. It's quite possible, maybe even probable, that the recent rise in crypto is more of a short-term speculative reaction
A reaction to what?
to the profit-taking or the perceived weakness in gold. When a major traditional asset like gold shows signs of a correction, some speculative capital often looks for somewhere else to go, somewhere with high volatility where they might make quick gains.
And crypto certainly offers volatility.
It absolutely does. So funds might rotate into crypto looking for that short-term speculative upside rather than because they suddenly view Bitcoin as a safer defensive asset than gold.
So this movement doesn't necessarily mean crypto has truly replaced gold in the eyes of, say, big institutions or long-term safety seekers.
I don't think we can say that based on this. There are still fundamental differences.
Can you remind us of those key differences?
Sure. I mean, gold has literally millennia of history as a store of value. It's highly liquid globally. Its price tends to be less volatile than crypto. And crucially, central banks hold it as a core part of their reserves.
And Bitcoin?
Bitcoin has a much shorter track record, just over a decade. Ownership is still quite concentrated, and we know it's incredibly susceptible to wild price swings based on tweets, regulatory news, sentiment shifts.
We've certainly seen some dramatic examples of that crypto volatility.
Absolutely. Just think back to May 2021. Bitcoin's price crashed spectacularly after some comments from Elon Musk and then China cracking down on crypto mining.
Right.
An asset that can lose, 50% or more of its value that quickly. It's very difficult to classify that as a reliable safe haven in the way traditional finance thinks about it.
So the digital gold label, it's maybe more aspirational or descriptive of its potential role rather than its current function for most risk-averse investors.
I think that's fair. It still functions much more like a high-risk, high-reward speculative asset than a direct replacement for gold in a conservative, defensive portfolio.
But it can offer opportunities for those willing to take the risk.
Oh, undoubtedly. For investors with a higher risk tolerance, crypto can offer significant profit potential, especially during times of broader market uncertainty when correlations break down. But it's just crucial not to confuse that high-risk speculation with stable, long-term value preservation. Getting those two mixed up can lead to some very painful losses.
Okay, that's a really important distinction. Let's try and bring all these threads together now. After digging into this rumored 30-ton gold sale and its potential ripples, what's the main takeaway for people watching?
I think the biggest takeaway is that financial markets are, prone to unexpected fits of volatility. Sometimes that's driven by real hard data, but other times, like possibly now, it's driven by unverified news, by rumors, and by the emotional reactions that follow.
So staying calm is key.
Absolutely essential. Maintaining a calm, rational perspective, avoiding impulsive decisions based purely on fear or, that FOMO we talked about.
And thinking holistically, looking at your own strategy.
Yes. Always consider your overall investment goals, your time frame, your personal risk tolerance before you make any significant changes to your portfolio, especially based on news that isn't even confirmed.
Sound advice. It really is about understanding the potential dynamics, isn't it? Not just blindly reacting to scary headlines.
Precisely. A well-informed investor, a thoughtful investor, is ultimately a much more resilient investor in the long run.
We'd genuinely love to hear what you, our viewers, think about all this. Is this China gold story just noise or something more? What are you seeing in the markets? Please share your perspectives down in the comments section below.
Yeah, those insights really do help everyone in the community build a better understanding.
And if you found this deep dive, this financial analysis helpful today, please do give the video a like. It really helps the channel.
It does.
And of course, to make sure you stay updated on the latest developments in gold, the dollar, stocks, real estate, crypto, all of it, make sure you subscribe to the Gold Talk Show channel.
And hit that notification bell.
Exactly. So you don't miss any of our future deep dives. Because here at the Gold Talk Show, we're not just about reporting the news.
We're about trying to understand it, unpack its implications, and figure out how to act appropriately.
Well said. Thanks so much for joining us today.
My pleasure.
And we look forward to seeing you all in the next discussion.